A professional trader approaches a winning period in their portfolio completely differently to an amateur trader. In fact, it's a completely different person. You'll find many traders that have the same technical edge, but as the years go on, they become more and more profitable. Not because they changed their strategy, rather they became the right kind of person. So in my 8 years of trading, I've had all of the highs and lows. I've been a university student trying to trade the forex markets. I've been running off into the bathroom to take a trade. I've had the late nights. I've had those periods where I'm traveling and trading, and now a full-time trader living in Dubai, doing this as a full career. I've experienced the full spectrum. And what I've been doing for the last 6 months now is something I've never seen a single trader do, which is live call outs of every single trade I take. Ahead of time, publicly for free, I've been giving my entry, stop loss, break-even point, and a full explanation of each trade. And some of these trade signals I've given have hundreds of thousands of views. And in the comment section, you'll see people making hundreds, even thousands of dollars trading alongside me. We've even had people get funded. We've even had people make payouts and share their payout certificates. Now, in a previous video, we spoke about how traders take losses. The amateur trader will say things like, as long as it's a lesson, it's not a loss. I was just victim of a stop loss hunt. Whereas a professional trader will say, I know why I took a loss. This loss was factored in. This is part of my strategy. And the reason I took the loss was for the reasons I overlooked, the devil's advocate, when I was getting into the trade. So online content will show you so many ways to deal with losses. You will have the escapism approaches where you meditate, journal. You'll have the practical approaches and the mindsets you should have to be more stoic, more accepting, and be more data orientated. But I found there was not so many people talking about winning periods. Now, as a beginner trader, I can say when I took a winning trade, I was more looking forward, just a few trades ahead and just a few trades behind. As a trader, we know that we'll take hundreds of trades in our career and we'll have hundreds of trades ahead of us. And in a lifetime of a trader, probably thousands and thousands of trades. When you are so short-term driven and you have a winning period, what I knew about myself as a beginner trader is I would be too happy. And you know why? It's because of the way the industry is set up. For example, the birth of prop firms. Prop firms want us to fail. Prop firms make their money when traders lose challenges, and that's their profit. So you'll have the conditions of the prop firm, which we know there are certain red flags to avoid. But more so than that, the hidden tricks that they do to bring your emotions out. So they'll add in leaderboards because they know that when traders go through winning periods, they want to brag and boast, and they want to post that online and have an emotional high. It'll also set the bar very high to say, this month somebody did 10%. So now the leaderboard becomes aspiration, and all the other failing traders are going to chase that number. What about the certificates? The payout certificates, the funded account certificates, that's all emotion, that's all status, that's all bragging rights to show your friends, to show your family. These are all things for external validation. And it was very normal for myself and even most beginner traders to experience 2 or 3 wins and feel overconfident and then do the mental maths of all of the potential. But if only I had $1 million in funding, or if I did this just every month, how rich I could be. And you start to get very orientated on the highs, on the potential, and you become very hopeful, very greedy, very aspirational, but you lose all sense of realism. Another natural tendency is this thing called confirmational bias. The idea being, for example, a casino. It's very normal for a gambler to think that in the roulette wheel, if the last 3 hands went on red, that the next hand should go on red. And the reality is the probabilities are not linked. Each moment in the casino is unique and it has its own probability. And the same applies in trading. If you do not have a predefined plan, if you don't have data to your winning rate, to your trade models, to the win rate of all of your trade models, your entry types, that is always going to lead to random results. So as a beginner trader, the mistake I made and the mistake many traders I see making is they go through a small winning period, they start to focus on everything they did in that small winning period, and using that sample size as the ultimate judge, they now follow those trades only and come to find out that they go through a losing period right after. And lo and behold, no surprise there, is because the reasons that they are following are not winning reasons. It's just those reasons happen to lead to a few winning trades and that sample size you took and ran with it. Whereas the professional trader, they're going to be unfazed in the highs and they're going to be unfazed in the lows. They're expected to go through losing periods, they're expected to go through winning periods. Whether your win rate is a 50% win rate strategy or an 80% win rate strategy, it's a guarantee you will have 5 losers in a row, and it's a guarantee you'll have 5 winning trades in a row at some point over 1,000 trade basis. So why would we judge? Why would we change our mind? Why would we get emotional? The reality is a professional trader has everything predefined and they have everything fixed for data. They know their win rate, they know their trade frequency, they know their average risk to reward, the average trade duration. They know on average how quick the trade will go to TP1. They know each one of their trade models in their system, and they know the data for each one of their trade models. They also know from their portfolio which trade models usually lead to the most profit. They'll have all of these reference points and they'll use these all as positive feedback loops. For example, if they go through a winning period, they are not going to start to modify their take profit levels and say, if only I held these winners a little bit longer, I would have got more profit. They'll say, no, I set my take profit levels for data and I know over 1,000 trade basis, some of my trades I would have have taken profit too early and left money on the table. And other trades, because I took profit early, I locked something in before it reversed on me. Same goes for a winning period. If they go through 5 wins in a row, they're not going to start changing their strategy. But what they will do is say, hey, my average win rate I like to keep between 45 and 55%. Now, because of this recent winning period, my average win rate has come to 65%. So that means it's out of my window. I like to have it between 45 and 55. Why would a trader want to have it less? It's because the delicate dance between the higher your win rate goes, the lower your trade frequency becomes, because you have to be more selective in your setups. So what they will say is slowly increase my trade frequency to start to add the other trade models that I'm not currently taking, those counter trend trades, those re-entries, those hedge positions. But I know if I start to introduce these trades, I'm playing the risk reward game. So I know I can bring my average win rate back down into my Goldilocks zone, because I'm going to start to take less probable trades that are still valid, that are still good setups. And what you're going to be doing is a delicate dance between trade frequency, trade models, win rate, and all of these things are going to be floating as a positive feedback loop to make decisions on exactly how you will trade. We're not going to get focused on a 5 trade winning period or a 5 trade losing period, because we know in your equity curve you have the highs and lows as long as the overall trajectory is going up over time. And the goal of a really seasoned veteran is to say, how can I take it from 10% a month to 20% a month and start to really make it go exponential? And the way they'll do that is month 1 they'll be more conservative, month 2 they'll still be conservative, month 3 they'll be less conservative, month 4 they'll be even less conservative, and by month 10 they'll be quite aggressive. Meaning to say, as you build profit in your equity curve, you can start to allow more aggressive setups, more of those 6 out of 10 setups, because you have profit to play with. So therefore your goal is not to optimize for winning periods, because as you start to introduce these less high probability setups that are still valid, your win rates will go down. But this is all okay, because the approach is we want to add more losses into our system that are still valid within our Goldilocks zone, because we are optimizing for risk reward and rate of growth. And we can't do that at the beginning. And that's exactly the process I've been following in my own trading for the live public callouts I've been doing. Month 1, when I was building my buffer, I was taking only prime setups. And now month 6, when we are 60% up, you're seeing me take counter trend trades. You are seeing me take trades out of my time window, because I have the buffer and I want to start to grow faster. This is not something I always used to do. Earlier on, I was just a linear growth guy. Now, as time has gone on, I've realized there is virtue in growing faster and actually growing exponentially. And you can still do that in various ways. One way is increasing your risk, to say I'm going to start my account at 0.25% risk per trade. And by the time I have 10 or 20% buffer, I can start to risk 1% per trade. When I have 50% buffer, I can risk 5% per trade. I wasn't so much of a fan of that. I didn't want to put too much risk on a single trade. So the way I decided to grow my account faster was, instead of increasing risk, I standardized my risk throughout, but I increased my risk through less quality setups. I want to be taking more aggressive setups, more trade frequency to play the risk reward game. So instead of taking bigger losses, I introduce more losses into my system in a very controlled way. The next point I want to mention is things that you never hear online, that people never speak about, but they are so crucial. As I always say, the purpose of this channel is for me to speak to my younger self, for me to give the lessons to you that I have now learned, but I have to carry the trauma and the scars and the painful lessons, whereas you can just learn it from my wisdom. And one thing that I never heard people speak about is when you make profit as a winning trader and you make a lot of money in a short amount of time, potentially on a funded account, and let's say you make $10,000 or $20,000 in a single payout. I've seen so many traders do this, that have a 10 or 20k payout, but they're not even profitable traders. They've never had 10k in their bank account before. And the mistake we make is thinking this 10k that we've made in a single payout is normal and is regular, because we get overconfident from the winning period, and it's very natural for a new trader to forget the obvious of, I've never had a payout like this before. I've never had consistency for more than a year. But they start to make financial decisions based on a winning period that might only be 3 or 4 big winning trades. And they start to think this is okay. This is going to be the rest of my life now. And they start to spend that money right away. And look, I'm all for spending money. You've seen me invest millions of dollars into cars, apartments, watches, but it's not about spending money. It's about what's the correct way to spend money. What I want you to have in the back of your mind is this idea of rate of replenish. If you have a 9-to-5 job and you have a $2,000 per month salary, you know that every single month you're guaranteed to get that $2,000 paycheck. So you can start to spend accordingly. And I think in general, it's good practice to invest at least 70% of your disposable income, meaning to say after your bills, after your rent, after your groceries, after your essentials, whatever is left, 70% of that should be saved, invested in yourself, just invested to generate an ROI. And the remaining 30% is fun money. Is money you can throw, money you can enjoy, money you can have on a vacation, money to buy some new materialistic item, whatever that may be. But if your money has no guarantee, for example, you invest into meme coins in crypto, you get a bull run, and now you have all of this money and you spend it all. How many times are you going to invest into meme coins and make that same money every year? So as a trader, if you make a payout and you spend 60% of it, 70% of it, that's extremely reckless because you have no buffer, you haven't set yourself up with passive income, and you haven't considered the rate of replenish. Especially if you're trading with prop firms, you have to reach certain milestones before I think you should start to enjoy your money. The first payout, maybe write off a little bit to reward yourself, to make things feel real and actually experience the high of making profit as a trader. But thereafter, you should have a very strict plan on how you spend your money. You should have certain milestones that are non-negotiable. For example, you should have 10K in your bank account at all times as a minimum. That should be an emergency fund. That should be, I need to buy more challenges because I've just lost a lot of funding. Why is this important? Because one thing we should always remove as traders is emotionality. And that emotionality is only going to come when we are desperate. If you are desperate to make profit, if you are desperate to pay your rent, of course you're going to be chasing a winning period and therefore go on a spiral, just like traders in a losing period go on a spiral. But if you have 10K in your bank account, you're not so stressed to make a payout that week because you know, worst case scenario, if you don't make a payout, you can go into your 10K savings and pay your rent. That is going to bring you financial security and is going to bring you mental peace, stoicism into the market. Next goal as a trader with your payouts is you should not be a prop firm trader forever. Or more to say, we don't know how long this opportunity of using prop firms is going to last. We've seen in the last 6 months how many prop firms have gone down. Even prop firms such as TFT, who are the top 3 firms in the world, doing more than $10 million in revenue a month, collapsing. It's a very uncertain time and we don't know how the landscape is going to look for the rest of the year or the rest of the decade. We might get more regulation, we might get stricter challenges, we might get stricter conditions, we might be capped on how much profit we can make. So stop acting like this opportunity is going to be here forever where you can sit and easily trade millions of dollars in prop firm capital. I don't think you should trade a personal account the same way you trade a portfolio of prop firm accounts. It's not your money, you have a reset button, you have the ability of a max daily drawdown, so we can lean into that. You could take a staggered approach strategy, the revolving door strategy that I've mentioned, where even if you're a break-even trader, you can make profit. There's so many approaches and strategies with prop firms that I think you should lean into, but we should not act like they're here forever. So what you also have to do is never lose sight that trading is a game of capital and trading is a game of personal capital. We can enjoy the fun and the experience and the benefits of prop firms, but we should always have a personal account. So milestone number 2 is get to at least 50K in personal capital, 10K in your bank account for mental peace, 50K in a trading account as a minimum. And as you go on, keep funneling profits into that personal live account because we don't know how long this will last. Second of all, if you go through a losing period or some calamity in the industry happens and you lose $1 million in funding, you still have 50K of real capital, an element in your portfolio where things are disciplined, professional, and you follow a long-term approach. Now, when you have a situation when you have over $1 million in capital from a prop firm and you have at least $100,000 in personal live capital and you have at least $10,000 in your bank account, start to invest in things that can make you passive income. For example, property that you can have capital appreciation and passive income from rent, or most importantly, keep investing in yourself and start to look into other endeavors in life, a cash flow business. You should go into masterminds, you should go into education to learn how to generate cash flow income so that you can have active income, but is probably more stable than the income from the markets. And that's just a hedge. And that's what any individual on a road to wealth as a trader should also consider. Once you have achieved all of these things, once you have cash buffer in your bank account, once you have a large amount of capital from prop firms, once you have at least $100,000 in a personal live account, once you've generated passive income and once you've generated cash flow active income, then it's time to have fun. Then you can start to splash money, enjoy your money and spend payouts as they come because you've set yourself up securely and you followed a financial literacy plan. But no trader does this. I didn't do this in my beginning. I spent as if it was an income from a job. If $10,000 come in, I put a little bit away for savings and I spend the rest. And we do this at the wrong ratio. Most people save about 30% and spend 70%. It should be the other way around. Now, the last thing that a professional trader does in a winning period was not only consider data and not only consider what my strategy tells me, but also consider my mind. What my strategy tells me and a data-driven approach tells me, if you go through a winning period, that's fine. We make no emotional change, we make no strategic change, we just keep following through the plan, and that's all well and good. However, I found when I'm doing this publicly and live ahead of time, and I have people in the comment section when I take a win celebrating and when I take a loss being angry and annoyed, and the pressure of my reputation has added something different for me. I can't manage my emotions in the same way because it's a bit unknown to me, and over time I'll get used to it. As the 6 months have gone on, I certainly have got better at it, but what I found is an abnormal pattern that whenever I have winning periods, I always get more losses right after. It's always been winning period, losing period. When I go through a losing period, I end up taking more losses because I start to get more emotionally negatively affected. And also, people don't follow me from day one. Certain people might followed me last week and they don't remember the winning period and the 60% profit we have. They maybe only caught the last few losses in a row and maybe judge me based on that. And I'm aware of this. And so therefore, what I recommend to you is, if you're a beginner and you haven't experienced all of these highs and lows, follow the approach of, if you have a winning period, go through a cool off, stick to the plan. And once you do this a few times, that's when you can start to introduce the other trade types to then play the data game that I'm mentioning, so that you can acclimatize to the emotions of going through winning and losing periods. Because we've said this many times, the goal of a trader is to last long enough in the game so that time and probability plays out. And if you go through challenge after challenge and fail account after fail account and lose your savings and lose these accounts, all of these emotions leads to people giving up. I don't really see traders that stop trading because they went broke. I see traders give up trading because they lose hope. So therefore, it's a key fact to consider that as traders, we need to have longevity. And that always comes back to the same statement: a restricted trader is a profitable trader.